We're currently putting $130,000 per year into life insurance, and that might sound crazy to you, but when I discovered this concept, I realized I had to put as much money as possible in as fast as possible and also get into this business. So let's discuss why I'm doing this in this video. Two products work for this strategy: whole life insurance and index universal life insurance. Let's start with discussing whole life insurance, since it is what most people associate with infinite banking and it has the highest guaranteed returns. The contractually guaranteed return within a whole life policy is going to be between 2 and 4%, depending on the carrier and the product. Over the life of the policy, the actual internal rate of return that you can expect to be credited to your cash value is between 4 and 6%. And we have ways to access the cash value income tax-free while we are alive, but it also passes income tax-free to your beneficiaries through the death benefit. There are 3 ways that we can get income tax-free access to the funds in a whole life policy. First is being able to withdraw up to the basis or the amount of money that has been paid into the policy. The second way is through policy loans, which we have a contractual ability to do. Some carriers will have fixed rate loans, some will be variable. Usually the rates are better than what you can get in a personal line of credit or in a HELOC. The last way is through an insurance-backed line of credit, or IBLOC. This is through a bank that understands how secure life insurance is, so they can offer very competitive rates on a line of credit against your cash value. For something like real estate investment, this is the preferred method of access, since the interest can often be tax deductible. Now let's pivot to indexed universal life, IUL for short. Many of the people in the infinite banking world say that this concept does not work with an IUL. However, it really can. There are only a few carriers that work really well though. With the correct carriers and designs, you should be able to expect no more than a 1% loss in a given year, but oftentimes 0% is the floor. The kicker is that you have the potential to have 30% or more in a year. A reasonable expectation for a long-term internal rate of return for an IUL should be about 8 to 10% per year, so it has significantly higher earning potential than whole life. The major advantage in an IUL is the index loan feature. Not all carriers have this, but we consider this a must-have for a banking policy. For example, in my policy, I am guaranteed for the life of the policy to be able to take a loan against my IUL at a fixed rate of 5%. So if my policy is earning 8 to 10%, then I have the potential to be earning a few percentage points on money that I have borrowed. Personally, I use a lot of the traditional wealth growth tools like real estate and index investing. However, I view both whole life insurance and index universal life insurance as the backbone of my overall wealth growth strategy. If you're interested in learning more, check out some of our other content or book a meeting with us to see whether we can help you on your journey.